What's going on, y'all? Today, we're doing a update. The beginning of the week. This is the third week for the $500 demo account. We're taking this $500 demo account to 2K, and I'm just bringing y'all along on the journey so you guys can see exactly how it's done and help motivate you guys, whoever might be interested in making some money on the side or just now finding out a little bit more about the Forex market, or just so happen to be looking for another stream of income if you like your job. So without further ado, let's get into the currency pairs. Right now I'm in the trade GBP CAD. Like I said, I enter and exit everything on the H1 time frame. I just like to leave my chart on the H4 because the H4 to me is less noise. You don't have so many candles to pay attention to. You can notice real resistance and support due to the fact it's not a lot of well, I'm not gonna say a lot of candle manipulation, but like I said, just on a higher time frame, it's less noise, so you could actually see what you see in a sense, versus the lower time frames like the 30-minute and below. Anything below it in the H1 is not a swing trading time frame, and I personally, man, they used to kill me on the lower time frame until I realized, man, it's not even about the time. It's really just about the direction and your timing of entering the market. So if you got good timing and you know the direction, all you got to do is wait for it to set up. And then as you get better, you'll develop more patience, which will allow you to therefore become a better trader and hold those trades a lot longer. The discipline and the mindset is the biggest thing when it comes to this. Once you learn the high and the low and getting in and getting out and how to protect your profit and all this and that, like, the rest of the things are really easy. Your mindset is what you need to conquer. You don't want to be too greedy. You don't want to be too fearful. You don't want to have too many trades open at one time. You don't want to be loading up, over leveraging, especially on one trade or in multiple currency pairs with the same currency, like let's say like NZD JPY or CAD JPY. You don't want to be, or you know what I'm saying. So but anyway, like I was saying, right now we negative 1 pip on this one. Been negative pretty much all day, this GBP CAD. So we'll see how that play out. Like I said, this is just an update. This is Monday. The Monday haven't even ended yet. It'll end in 30 minutes, roughly 30 minutes. So Monday's not even open yet. All right, now the NZD USD, like I said, I enter and exit on the H1, but I leave my chart on the H4 due to noise. I want to cancel out all the noise and see what's really real on the support and resistance level that I draw. As you see, I try to do it off the H4, and I use the double line method like I always talk about. And this one right here, you see how like my stop loss is behind the resistance. My double lines right here, as you see, and then you have my stop loss. Like I said, I normally don't use stop losses, but I'll leave it on there. I mean, I don't know. I might delete it. Who knows? But I'm currently positive 11 pips on that one. Euro NZD, same thing. Support and resistance. I got in for a buy. I'm up 57 pips at the moment. And I got in that trade, I think yesterday. I'm not sure. All right, now negative 35 pips on CAD JPY. I'm gonna double check this one. This might be a bad trade, but I doubt it. So I'm gonna just keep watching it. Let's just see how I play out. It look like this is the highest point to me. This look like to be the highest point. Came down right here, bounced off, gave it a problem, and it bounced back up. And this level, which as you see, price came down, kept hitting right here 4 times, rejected, came through, wick, shines rejected, came right back up, and then it finally went through this zone, bounced right back off that support, came back up to this level, which at this point, price used this as a support Came through, broke it. Now that support becomes what? Resistance. Bam. So now it came back down to this support and it broke through it. You see it came down, retested a little bit, came down further, created a new low, and then it came back up and fully retested that resistance level and created a new low, as you see where my lines is on the H4. Like I said, I use a double line method. So at this point, what I would be looking for is maybe like I'd say something like a retest right around this level. I could be wrong, but I would imagine it to retest at this level right here. Yeah, but retest at that level. So I'm actually watching it. If it break past and keep going higher and higher, then I already know it's a bad trade. But at this level, you can see price came up to this level, so it's still respecting it right now at the moment. But like I said, I'm negative 35 pips and counting. Let's look at the next currency pair. Okay, I'm not in EA. I'm in, so this is NZDJPY, negative 13 pips. Like I said, support and resistance on the H4, like my levels, using a double line method. And I got in on the H1, so let's look at the H1C. So what I'm seeing right here is a swing up. See a high point right off the resistance. Came back down, created a new low, went right back up. It's pretty much at the same level, haven't really broke too much past it. So it's still respecting this level. And the current candle is red. So we're just, like I said, just it's no real way of knowing specifically when the market is going to turn around exactly. You could be within a 50 pip range of knowing where the market is going to turn around, or even in a 100 pip range, but it's going to be very hard to, pinpoint within 20 pips the trend is going to turn around in this direction, or within 35 pips the trend is going to reverse in this direction. It's going to be very hard to do that, which is another reason why it's so hard for me to sit here and put a stop loss. Had I put a stop loss right here, right above this, and then it went down, a lot of people would have thought that the trend was actually going down when it really wasn't doing that, but creating the first leg up the M. Came back down, came back up. Most of the times, the second leg will end up being higher to take out all of the stop losses that was put right above the previous high, or the pending orders. They want to activate the pending orders and then run away with the money. So that's another reason why I don't use stop losses, because I understand that's another way that they trick people. They have money trapped at a certain level. They got to get it released. So they like to fake people out at certain key levels before they move the market in their intended direction. So let's go to the next one. GBP USD. Currently not in that. USD CAD. Currently not in that. Now look at this one. Let's look. These lines are everywhere on this. All right. Boom. Let's see if I could fix my lines so I can get an understanding of what's going on. And this is what you need to do whenever you come to a chart. You need to first do your technical analysis, and your technical analysis is going to allow you to find a trend. Where's the momentum? Where's price wanting to go? So on and so forth. So you just want to do that just to give yourself an idea of what's going on, and to better your chances at being right and being profitable in the market as well. So from what I'm seeing, let me see. It looks like the market is stuck in consolidation from what I'm seeing. Yeah, from what I'm seeing. So I'm gonna go over here. Alright. So I put my support right here, double line. I use the double line method as always, like I talk about. So this is another thing I was talking about right here. Price came down and it hits a certain support level and it rejected and went up, right? I got in right here, price went up, I was positive, and now price is coming back down against me. But also what it did was it took out a previous low, and it probably was a lot of pending orders, stop losses, things like that. And as you see, price came down, it broke it. Let's zoom in. Price came down, it broke it, broke the little support right here, created a new low. But within this small move happening, this is nothing but a 20, let's just say a 25 pip move. It probably activated all types of sell stops, sell limits. You know, a lot of people probably watch this level right here to see exactly what is going to happen. So right now I'm looking at this and it looks like price wants to come back down. It might just come back down to this level right here and come back up. And then this may be a sign of support right here. Or it might actually be trying to break out. It creates the retest right here. Now you got the rejection right here, which is the form of a camel. A candle. It's a wick. So you got the wick right here at resistance. And now you have a series of 3 candles. You have 2 closed candles that are red, and then the current candle is red as well. So now you're getting like a series of red candles showing you that the momentum wants to go down. That's just the current momentum. That doesn't mean that the trend won't change. No, it doesn't mean that the trend is not going to change. This price action may go down for the next 3 hours, especially seeing how the market is about to close at 4 and start a whole new day. So a lot of people getting out the market. A lot of day traders don't hold their trades this long, so the volume tends to drop at the end of the day as well, which means that the trend would counter trend at the end of the day. So if the trend of the market is going up, by the end of the day, it'll start pulling back some due to the volume dying down, because a lot of people day trade. A lot of people don't have their money in the market, so the liquidity to go down a little bit. And this is why you got to learn sessions, the best time to trade, and things along in that nature. Depending on the type of person you are, then you would therefore come up with a strategy or a game plan that best suits your day-to-day or your mindset or whatever will allow you to trade and keep your emotions in check. So for me, I tried to day trade, didn't like it, wasn't worth it. I lost a lot of money. I made a lot of money real fast, but I also gave it back due to the fact of maybe being too greedy, not knowing when to get out, not looking at the bigger picture and knowing the real intended direction of the market, which is another thing. Even as a day trader, you can't just watch the 15-minute or the 30. You need to look at the daily and the 4-hour to know when it's about to change directions. Is it at a good support or resistance level for you to enter? But yeah, all of that is going to come with experience eventually. So my goal here to do what to do right now is to show someone that's very new and green on investing in Forex, in the Forex market, how they can go from not knowing too much or anything, and maybe within an amount of weeks could actually start to become a profitable demo trader. I say demo trader because it's not wise to go straight to a live account regardless if you know what you're doing. A lot of people feel like they know what they're doing until they keep blowing their account. So just test the waters on a demo, get good, you end up being profitable in the demo account, then you'll be ready for the real thing. The only difference at that point is the emotions. You have to keep your emotions in check. So, and that right there will come with experience, time in the market, knowing how the market moves, knowing what time of day to place a trade. All of these things become a key factor, but it's also going to end up being a tool in your toolbox. Learning the discipline, the time